Welcome to TradeTheNBI.com. This is John. This report is for the 10th. Well, right in line with our expectations, even a little bit more soft this than maybe we expected, but still in line with that slight negative bias with the sideways overall movement. So we popped back up above the 76%. Wasn't enough to hold on to it, and that was the white NBI lead, but you can see it's already beginning to fade a little bit, and a magenta making its attempt to come back up. Of course, still technically under a cross at this particular point because the day obviously is not finished yet. But it really points to what we were talking about with the DOC orange here. Caught between the cyan and the red is continuation, and the continuation was a slight downdrift and moving sideways across, and that's exactly it seemed like a deep move, but you can already see a big bounce back already within that overall move, giving us a pretty consistent sideways. Short-term buyers popping up a little bit at this particular stage to kind of give a little bit of strength, but no real significant activity from the DOC red or green, which would be midterm buyers, but they're flattening out, so that could give the opportunity for a little bit of a pullback. And we're seeing the shakeout be a bit more erratic to the negative side, and as long as it's in the negative side, the bias is always going to be selling into that strength. And so we look down here at the extremes. We've already dipped and made a lower low, but now we're doing it under higher extreme with the green. That's net positive within there. And I believe that almost gave us the 100% move. That full low was down at 44.70, and we made it to 78, well over the 80% full retrace of that. And again, even when we did it the day before, satisfies the dip below that. So that's a consistent move for filling back all of the algo move that created the initial impetus push higher into the new highs. And so it's all pretty congruent as it is now, and still setting up for the potential for a bit of a bounce. Now you can see from a NQ standpoint, the yellow extreme histogram down here that popped up. Not quite the red, but we often get those to fill back when there's weakness. And sure enough, it did that as well the other day. And so that was a much more complete move. And we've noticed that the NASDAQ has been weaker in general, simply because it had already broke below at 76% and stayed pretty much all the way below it. So now having dipped all the way to the 61 and creating a slight pop up. And also the MBI white readings were a bit stronger because we still had DOC magenta below yellow at that particular stage. So pretty congruent from that standpoint, and a lot weaker from a DOC. There's the angle of that dip is much stronger now. We will be watching because when we get into that negative 13.5 range, which is where that line is right there, and then you start to dip towards negative 20, you're going to get an automatic positive reaction from that. So we can see 0% rising at this particular point on our Morganacci lines. That also puts a little bit of a downdraft. And so at this particular stage, 50% would be your fail-safe dip going lower at that particular point, right around 15K. That's if we see some additional selling within it, but at this particular point, probably likely to hold on fairly decent. And in that softness, you get a flight into treasuries, reducing the yield slightly. And that's going to be the tough play because with rates elevated like this, not as bad a move to be in treasuries vis-a-vis the market. And that puts a lot of pressure on the market because it's either going to have to perform or more money is going to move into treasuries for the advance rate, particularly if we start to see weakness, because then it's like, well, yeah, I'd rather lock in a high returning rate, guaranteed safe over a longer period of time, knowing that potentially the economy is going to weaken and they're going to lower rates, or at least the Fed will soften. Now, that would be true if you didn't see this, which is oil continuing to make new highs, despite what we were talking about. They had the dip here with the inventory buildup, but kind of irrelevant because you have that supply issue where we were talking about in Iran wanting to put soldiers on the ships, and then you have the Baltic Sea with the Ukrainians bombing Russian shipping, civilian shipping, not military, and whether or not that's going to create a significant displacement in supply is a real thing. And when you're over this 80 range, and now we've broken into a new range here. Sure, it's on positive extreme, so we're likely to get some move back and forth on it, but still, that puts upside pressure on inflation, which is both a positive and negative for the market, but certainly it's more problematic when you're thinking about uh, people looking into the future thinking that treasuries are going to soften or whatever. It would mean that you have to have uh, an acceleration in inflation, which is going to cause the market to have to move higher to accommodate for that devaluation. And that's just the way it works. So a little bit of bounce back for euro. They're going to have to defend it right along this 50%. Should it fade in between here, then I think it becomes a bit more problematic, because I think you certainly would get a cascade lower. So we'll be watching that NBI white, particularly if it climbs and you see a magenta fade back below, particularly under the 25 range. And then I think that the euro would be in crisis mode, because again, you're going to have a flight of capital wanting to move towards the higher yield, which is certainly not in the euro, but definitely in dollars. This is an interesting one. One could call it a manipulation of gold, but the fact that it's moved lower, getting pretty close to that real strong opportunity of a buy, simply because at this particular stage with inflation rising, that gold's going to make another run, and it's just a matter of time for that. Currently, it's still dipped below the red line, but when gold moves, it's going to move dramatically, and it's going to move in a hard way. Bitcoin wasn't really able to do anything. There was a nice little push there, and then it faded all back. And again, that's pretty clean with MBI white, but you still have magenta over yellow, so that's usually enough to hold it in place, and that's exactly what we're seeing. So from those reading standpoints, it's all been pretty consistent, and there are no real surprises from any of what we're seeing at this particular stage. The volatility increase, though, certainly is going to make some people nervous, and when they get nervous, it adds even more volatility to the situation. So it kind of feeds itself until there's a point of exhaustion and everyone just stops. ETH, identical. And when we look at the 50K, you can see that. So we bounced up, lower top, so you can see we're making consecutively lower highs each time. Now we're coming right back to the same one. So this becomes critical as to breaking out to get rid of that descending high viewpoint, which certainly a lot of traders are going to be drawing those lines going across, and definitely influence their viewpoint on it. We had a nice spike of MBI white there, and within the breakdown, the indication that you move towards the 0%, and it got pretty close to that, but there was enough buying within that short-term buyers. You can see from that rejection, and there's one of those larger spider moves where you have bulls coming up, they fade, shorts attack that situation, and that leads to a pretty rapid decline, and it was quite aggressive. Then you get the nice buy configuration here with the DOC orange dipping below, red and green turning up, and we did that on a higher shakeout and relatively matching lows, but a little bit higher, so it's pretty congruent. We would call that a P2 pivot, where it's slightly higher pivot for the red DOC, and those usually have fairly decent capability of making a move higher. When you look at it from an intraday, it was the pre-market that had created a little bit of a pop back over here. And then by the time we got to the actual start of the US pre-market and that, things began to fade off a little bit, stabilized right to the open, but there wasn't enough impetus to drive anything, and that created the new lows, clearing out stops. And then as soon as they were pretty much flushed out, strong dip right through there. And then even though you had the MBI white, meant there was still a lot of short activity, but you had the magenta staying over yellow. And so you had all those short traps, and you had a beautiful short cover rally. And that's a good one to look at, because that's exactly how you'll see that play out, where you get the spike. And if that magenta hasn't dipped below, and that was simply because the yellow had faded early, a lot of times the best ones are when you see the yellow continuing to rise, and then you get that breakdown crossover. Those are where you get the short ones. So this was a great fourth short cover rally. Didn't last a whole long. Positive extreme started pretty much within the early range of it. Sell signal came through with the crossovers, and then you had the full breakdown, and all it did was fill all the way back to where the short cover rally started, and then a little bit more, and then stabilized at the end of the day, only to give the post-market players an opportunity to do this and run things up in the European session, which they're doing right now. And you can see that's softening off the positive extremes that they had created from it, which began right here and have filled beautifully. So all pretty consistent, all pretty easy to see from the readings. It's just a matter of following what we see and going with it from there. As always, though, anything relevant, I will put it on the Skype chat. But Trade well. We'll talk again later.